Good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Tuesday, the 29th of April, 2025. You know, the playing field changes so fast that if you're trying to keep up with it, it's both an exciting and difficult time to do so. As an example, all day long we kept hearing now about the Trump administration wanting to make changes to the tariffs on automobiles that are assembled, produced in the United States, that use parts from elsewhere. If they use, I think it's 75% or 85% U.S.-made parts, it shouldn't be tariffed. There's many changes that are happening. I wish I could say that it's every now and then. It's almost hourly. And I think the president made some of these changes as he's got a big campaign speech now in I guess it's Detroit. I know it's in Michigan. I think it's in Detroit, where he'll have the auto workers in front of him. And the last thing he wants to do is hurt them. On the other hand, we keep hearing about all the trade deals from Scott Besant, our U.S. Treasury Secretary, and then our Commerce Secretary, Mr. Lutnick. And Mr. Lutnick is saying, bingo, big important thing. He claimed today on CNBC that a deal has been struck with the first country. He cannot spring the goods about it. The country needs to give the Trump administration and President Trump the go-ahead to announce it, but he claims the first deal is done. With that, the stock market, which was down, having trouble holding near unchanged on the day for most of the morning, turned itself from that down move and came right on up. Oh, that's good news, and away the market goes. The problem is, as you know, the devil's in the detail. What is a deal? Is it a letter of understanding? Is it an actual deal? Is it the framework of a deal that's not on paper? I have no idea what they're talking about, and we won't until we hear more from him. Energy markets still under pressure. I've warned you, I think that you're going under the 60 level in crude, and I think that is a problem for U.S. producers. Now, not the moment you get there, but if you're making plans, what do you want to do? If you're under $60, you're probably not spending a lot of money on new wells, maybe not going to increase your production by as much as you thought. When we take a look at the interest rate sector, the market's liking what it hears. You can see there's bids across the board this morning. That's good news. The dollar was up slightly today. In the evening trade, most currencies are waffling as they want to see what this is all about. When is the president going to spill the beans? And the metal markets as a whole are a little bit lower. In terms of news, you have a big day besides whatever the president might say in his speech now. We have the Mortgage Bankers Association coming out with their 6 a.m. numbers. The indices all come out. ADP, private sector jobs. What are they going to be? They're looking for them down, I can tell you that, about 30,000 from last month. First quarter employment index data comes out at 7:30. Then we're going to get our first look at the first quarter GDP at 7:30. Personal income and spending, and the all-important PCE index that the Fed looks at 7:30 a.m. So at 7:30, you have all these reports coming at you. I'm just saying, be careful because the market's going to move on each one. Then we get a slight break. I'll have some coffee and get ready for my recording at that hour at 8:45. I get ready to put out my Spider ETF video for my subscribers. And at 8:45, we're going to get the Chicago PMI, then the National Association of Realtors. They'll be coming out in the morning with their pending home sales. We'll get the EIA numbers on stockpiles and, of course, earnings. And this is a big week in earnings because we do have Mag 7 companies coming out, although they haven't been the leader in this market. The leader of the market are other areas. You know, Boeing, take a look at that. I'll go into that later. But there's a number of other markets that have taken over the leadership at this point in time. But the key is, the president, what's he going to say? Who is the first country we made a deal with? I hope it's not that little bitty country which has nobody in it, basically, and that's our first deal. I'd like it to be important, but we'll see, and we'll see what is a deal. That starts giving us frameworks that we can start hanging our hat on. Okay. When we take a look at the S&P, the market has come up this week. It's up 1/3%, But from the April 7th through that April 9th break low period, these markets have had a nice bounce. They made back a chunk of what they lost, but they are still in the red. When you take a look, you can see that April 7th low. You can see how the market has come up, and now it's coming into heavier resistance. This whole area is a resistance area. Once you got under it, as you come into it, that's where you should be looking to see where the market has a problem. Another thing the market has done, it has now gotten a pattern of higher lows and higher highs. So we can say the trend of the market is up. It's no longer just a correction off a big break. Okay. It's over the 18-day average. That's bullish. It means the bias is up, the trend is up. It's overbought as can be, but it could embed. So both numbers tonight are over 87. You can't count them as embedding because we don't know where they'll finish for today. So let's go to Tuesday. And on Tuesday, both numbers were over 80, but not over 80 on Monday. So what are you left with? An overbought market no matter what tomorrow does. Overbought market reaching for a Bollinger Band, waiting for the president. I say the pros at 5,700 are aggressive in taking over off positions if they have long ones on. The NASDAQ is the same type of story. If we take a look, I'll just show it to you here if I can get this to go. Yeah, there we go. So both numbers over 80. Both were not over 80 the day before. Just overbought market. The Dow Jones is just overbought. You can see if you get up there, terrific. I am not screaming go short. I am saying very clearly, if you get up that high off of a piece of news that I don't know what's going to come out between now and then, watch out. It is not the spot, in my opinion, to buy. It is the position where you take more off. Do I think traders did do some liquidation as we made the first challenge 4 days ago there and dump things in their portfolio they may not want? Absolutely. Again, on the next break, they'll probably do the rotation of buying the market. And in the Russell, you're getting close to that Bollinger Band, and again, you're overbought. So we get to the DAX. Do you remember when I said when you took this day, you had an outside day out, you took that high out, one of the goals was the upper Bollinger Band. Doesn't have to hit it now. You've made your run, but it has an embedded reading. This is much stronger than the U.S. markets at this point in time. So on good breaks in this market, I'd be looking at the market for the opportunities to come in still until you lose that embedded reading. You're overbought in the 10-year note. The market has really come alive. Again, remember this August 7th time frame and look at how it's made back. You're about halfway of what you lost in the market. 2-year notes actually throwing out bull signals in terms of higher lows, higher highs, suddenly very overbought. I'd be cautious with that. In the dollar index, the dollar, when it lost its bearish reading, I thought it would make a better run to the 18-day average. I get more aggressively bearish if the market takes out the low of 2 days ago. So you don't want to see Monday's lows taken out. If they are, I think that could spell trouble for the market if they don't first get over Friday's high. So I'm looking at what the market's doing there. It is oversold. I'm certainly not screaming at you, go sell, sell, sell. That is not what I'm saying. As a chartist, though, I'm saying you take that out and you open the door up for potentially challenging the low. And if you do that, you really open the door for lower prices at that point. That would be a bad sign. In the euro, you're correcting an overbought condition, and while the bullishness is still prevalent with higher lows, higher highs, you're overbought, supports back at the 18-day average of closes. The British pound has been stronger than the euro. It has got the embedded reading. I say this market's still getting bought by the pros, who will dump it, in my opinion, if the red line of the slow stochastic, which is 93.71, closes under 79. You'd have to have a pretty big break in order for that to happen. I don't know what would cause it, but it could happen. Bitcoin has the bullish embedded reading again. To me, that says on these breaks, the pros are buying and they're looking for the market. Remember, I gave you a $100,000 target? It's tying together now with the Bollinger Band. In the Brent, I'm still bearish. I mean, I don't see tariff deals getting done for a very long time. I know that we're going to hear tonight or tomorrow or the day after that one deal is done. There's 70 some odd countries you have to do deals with. And those that don't get the deals done, what happens? The reality of the situation also, and there is a good reality here, is that China's also realizing, playing as tough as they are, where's that going to get them? And they're suddenly revisiting what they said about Boeing and airplane parts. I read that in the papers today, so that's very, very important. You know, you look for all these nuances because I'm a rough guy, I can do this. Well, when you've got millions of people counting on you and jobs being lost, there's problems. Did you see today, was it the UPS let go of 20,000 people because of the orders from Amazon falling sharply for them? I believe I've got the facts right on that. So ask those people how they feel about tariffs. Lower highs, lower lows, 62.14 for the Brent is the next point. By the way, did I say Brent there? This is the Brent, 62.14. Yeah. Then we come to the WTI, which 58.93 is the next support. This chart looks ugly to me. I expect to see aggressive selling at 61.56. I'm not keen on the risk factor over the 63.90 level. I can say that. But the chart action is bearish and looking lower at this point in time. Gasoline, let me come back to that. I went too fast. Key numbers, the 18-day average. It got overbought, doesn't have any pizzazz left in it here. Maybe the Trump administration can keep the gasoline from going up in the spring, summer. They might succeed in that. And in that gas, my first objective when you lost the bearish embedded reading was to get to the 200-day average. I'd love for it for just good move to get back to 344.80, the 18-day average, and see how it performs in that general zone. So with that, I'm Ira Epstein. I want to remind you we have a lot of free offerings for you. You get them by going to iraepstein.com. It could be charting services like the one I'm using here. Give it a free spin. We have one that's also web-based called our QT platforms, market letters, price counts, couple of trading courses for you to look at, explanation, a lot of courses from the Chicago Mercantile Exchange. So there's a whole array of stuff. iraepstein.com free offers. Scoot right on through it. Choose what you want. You just put in your name, your email address, and we'll get everything out to you. I'm Ira. You have yourself a great